What is going on? Good morning, everyone. Huge volatility in the market continuing. I'm gonna give everyone just a few minutes here before we get started. Alberto, Fax, Heath, what's going on, everyone? Great to see you. Excited for today. The DXY, look at that, held the trend line over here. Taking another run at this resistance over here. We'll get started in just a moment. Ooh, Canadian dollar traders, and I'm holding it along. We got GDP in just a couple of minutes. It's already, sorry, 30 minutes. What's going on? Where's my head? It already came out. We had a better than expected print, and the Canadian dollar still trading at the lows of the day. Gotta love that. That's a good question, right? So Israel said that they announced that they'll have a vaccine within, I think, like weeks, but everyone else says that's impossible. It'll take like 12 to 18 months before not only is a vaccine but produced but able to get out there. I think this is the question of the day, Blair. This is the question of the day, and I think, judging, you guys probably saw on the news yesterday, I think it was on Bloomberg, there was a 20-year money manager who said, no, I'm sorry, not 20 years. He went through the crash of 87, for probably 40 years, right? At least 35 years, probably 40 years. He said this is the worst, possibly the worst thing he's ever seen in the markets. Sit on that for a moment. Before this happened, the whole financial system, finance 1.0, was in a very fragile place, right? The credit markets are so close to collapsing. Everything was priced into perfection, and you could see that this is being repriced quickly right now. But I don't even think this is the beginning. I don't think this is the beginning, personally. Let's see what happens. Let's see if China, South Korea, if everyone's able to get back to work within a reasonable amount of time. But it seems to me that as people start going back to work, what's going to happen is that there's going to be further spread of the virus. And obviously, we all know it's not the flu. What is really concerning is that, look at the measures China went to. They know something, right? Quarantining hundreds of millions of people, the way that they are sanitizing the streets. I think what stops this, I think there will be a rally at some point, whether that's today or next week. There will be a rally, but I think the rally will be sold. And I think what's going to happen is the first thing that's going to happen is obviously the Federal Reserve is going to need to cut rates, and maybe that we rally on that, but that will be sold. And eventually the Fed is going to have to start making some bigger cuts and get close to zero. Then the Fed will go ahead and institute quantitative easing. And then the question is does that do it, or do the markets not buy it this time? I don't know. I think until we start seeing a lot more press conferences, until we start seeing Powell visiting the White House, and I don't think this party's getting started yet. I will continue to be holding risk off. And that's the way I'm playing it. All right, let's get started. We're looking at the daily and we pop down to the 8 hour. I could probably even be on the 1 hour with how things are moving right now. You can see the futures have been jumpy. The futures started up last night, up 1%. Then shortly thereafter into early Asia, we're down about a point and a half. Overnight during London, down a point and a half. And then during New York, we were up about 0.25%, maybe a little bit more, and now we're back down. Right? We're going into the weekend. I don't know if we'll be able to rally on the equities today. I'm not really concerned about that. I think that FX is going to hold risk off going into the weekend. I can't imagine anything different. Gold and silver, they're getting pretty smacked up. And a lot of people would think that during this type of environment, they would be a little bit bid. They're not. There's multiple theories out there. Again, going back to 2008, the last crisis, these things fell sharply. Let's go look at 2008 really quick. Here we go. This is right here, October 2008. This is the day Lehman, or I could say the week that Lehman declared bankruptcy. I don't know if it was the second or third week in October. It was right around here. You could see going into it, gold sold off really big. Gold sold off really big. And then it wasn't until we were down to zero and the Fed instituted a quantitative easing that gold then went on its bull run, trading all the way down from 700 to 1900, 1800, 1900 in less than a year. And why I think this time will be different, and why I say that, I mean that this is a different type of crisis. Unless it does become a liquidity crisis, then people need to get out of gold, and they need that liquidity, so they'll sell gold because gold you could easily sell. But Blair sent over something for Forex Live. It kind of very well complemented what we were talking about yesterday, where first of all we had come off very high very fast, and really we're just consolidating that big move up. We're about halfway between the breakout and the high, so we're just consolidating. Down here this morning, I was looking at gold. You know, I'm not stepping in there. I got some FX trades that I'm happy holding, but I was considering it. Silver is down 3.8% right now. That's pretty big, right? Down into this area over here, you can see this is the area of support. Silver is now resting on it. We got about, I would say, below that area of support, 16, right? 1644 would be, seems to me like a pretty decent place to stop. But we're at some support right now. It's coming off. It's coming off very hard, and I could be wrong, depending on what happens. And I don't know what's going to happen. I mean, I feel like I do know that the U.S. dollar, the Japanese yen, and Swiss franc are going to continue to strengthen. I do believe that, and why I do think that we will see silver. Forget 6 months or a year from now, much higher. I do think in next week, in the weeks, I do think that in the near term, silver will also be higher. But over the last, look at over the last 24 hours, we're down 3.8%. That's pretty big. So I don't know what y'all think of that. Danielle, great to see you. Welcome. Jesse, Mima, Harshal. There we go. We're just talking about silver right now myself. Yep. We'll check out the euro, Swiss franc, because we're going to check out everything. So I'm not sure. I'm not sure if this liquidation that we're seeing on precious metals will continue or not, or if this is a buying opportunity. Again, I am more confident about things as far as, you know, the bid on the Swiss franc, the bid on the Japanese yen, and the bid on the dollar. So that's where I'm positioning, but I'm interested in this coming down into the support over here, coming off, selling off so sharply. That's a failed breakout over here, not on gold. Look on silver. Here's the break, made a new high. And now we took out that low. So maybe that flushed out a lot of traders. Maybe this is the time to get in when it's not looking so attractive to people. But gold did not do that. Look at gold. Gold broke out and is consolidating above. So kind of like Dow theory on precious metals. Euro, Swiss franc. Yep. So supposedly, or probably, this was, you know, the Swiss bank intervention holding her up here. Listen, it was just rejected hard by the resistance. And it looks like it's going to go on to make lower lows with or without the Swiss franc. So there's probably a lot of stops over here. There's probably a lot of stops right under here for traders who are a lot of retail traders, maybe even bigger institutional traders, who believe that the Swiss bank has their back here, and they wanted to try to get in front running the intervention of the central bank, but that's not working out. And it looks like we're going to be making some lower lows there. So again, I don't think this is a good pair to be focused in on. I think it's a little bit of a gamble because you don't know what the Swiss central bank is going to do here. And I do not, you know, I really caution against being involved in this pair because of that factor. Let's take a look at the DXY. DXY broke this trend line overnight and then has since traded back up. And it's, you could see this was our blue box over here, the top of the resistance. Price is having trouble right now. I think that so a couple of things. I pointed this out earlier. I pointed this out yesterday and then earlier in the chat. And I just want you to see this tight correlation between the euro since January 28th. Look at this correlation between the S&P, the US equity markets, and the euro US dollar. And it's so strong. I think it's going to break today. I think going into the weekend, we're going to continue to see the market sell off, but I also think the dollar is going to continue to be bid versus the euro because I think people are going to want to hold dollars into the weekend. So I think this was a case of, first of all, on the rise up in the S&P, this was traders, foreigners wanted to be involved in the US markets. And that's why you were seeing that also the enormous large sell-off in the euro. And then US markets started falling. Traders were taking that money back home. They had to buy euros. We were seeing the last couple of days that sharp rise in the euro during the fall of the stock market. And I think that today this tight correlation ends. I think that the markets are going to stay risk off. And I think that we're going to see actually the dollar bid against the euro during this session. So DXY looking like it's trying to get back above this area of resistance, continuing the breakout. Dollar is so strong versus everything else, right? Not versus the euro, versus the yen, which we expected that once the Japanese yen broke out this level over here, this support at 109.71, that this would be a false break. We would see yen strength. I jumped in on the New Zealand dollar, Japanese yen as soon as that broke, and it turned out to be the trade of the, I'm still holding it, I will still hold it. It turned out to be the trade of the day. Weakest versus the strongest. US dollar is stronger than everything else though, by a lot. I do want to look at that across the board. Let's look at the Australian dollar, US dollar first. All right. Steve, I hope you're still involved in this. Ever since it broke down over here, it's just continuing to bleed. I'm just getting more interested right now in just seeing the dollar strength. And there it is. There's the dollar strength today. I want to see the pound US dollar. All right. Again, dollar strong versus everything except the Japanese yen. I will check the Swiss franc. British pound is coming down into this critical support. I believe they are posturing pretty hard, both sides, the EU and the UK. And the UK is talking about walking away from a deal if they don't get what they want. So this is weighing in on the pound as well as that strong dollar. What's stronger, the Swiss franc or the US dollar? I would say it's kind of mixed. You definitely Swiss franc overnight, but US dollar is definitely firming up here. So it's a little bit more mixed, right? But we know against everything else, dollar is banging pretty hard except the yen. This looks like the New Zealand dollar is in jeopardy here of taking out this low over here. That could really, I think, send it. Yeah, we get below here, it gets squirrely. It gets squirrely. So I mean, another good question, Blair. Another good question, and of course, I don't have any of the answers ever, but I'm holding my again. I wanted to take a short on the pound Japanese yen. I wanted to take a short on the Australian dollar Japanese yen, and I wanted to take a short on the New Zealand dollar Japanese yen. I took one on the New Zealand dollar Japanese yen. I can't take everything. I'm very selective. And I'm holding that as my trade against the Japanese yen. I was looking at the US dollar Japanese yen break, but I didn't want to trade the dollar versus the yen. And I wanted to go where that weakness was, the commodity currencies. And I also wanted a euro Japanese yen short and a Canadian dollar Japanese short. You can't have them all. I'm not giving up on my trades. I don't think that the situation is going to sort itself out anytime soon. I think that this party is just getting started as far as the situation with the coronavirus. I think over the next couple of weeks, they're going to start testing in the United States. They haven't even been testing in the United States. They've had something like 450 tests in the United States. We're going to see enormous amount of cases rise. That's going to, that's really going to set off that risk off tone. People are going to get fearful. This is the time to hold trades, and I got a huge head start here. I sold this in the pre-market. I mean, pre-market, I say before Asia. Up there. No, where I get up there. Really, literally up there, 69.27. And this was, as price came into this resistance over here, broke down into that resistance. That's where I took the trade. I have no idea. Things will have to change, right? I got my eyes on a little bit lower. I'm looking for 1,000 pip trade here. I'm not giving that up. We have everything. We have all the momentum headed towards risk off, and there's no reason for me to get shaken out of my trade, right? You gotta let the winners run. You gotta know when to push. This is not a normal circumstance. We're not dealing with normal market conditions, right? Go spend the weekend. Over the weekend, go back and look at what happened during 2008. Well, here's a weekly of the New Zealand dollar, Japanese yen. And yeah, you're going to see some rallies. you're going to see some rallies, but you got, you got to hold it to get it. You got to hold it to get it. This seems to be the time to hold. So hope that makes sense. This is the time to push it, right? Steven Druckenmiller, one of the best traders on the planet, legend. He talks about the greatest thing he learned from George Soros is that when he's sure about a trade, to go big and to push it, right? Yeah, push it. This is the time to push it. We're seeing the euro finally decouple. S&P is now down 2%. Euro also down. Didn't hold this area over here. Saying the first case of coronavirus has now been reported in Mexico. I spent a lot of time in Mexico. First of all, when when the flu goes around in Mexico, everyone gets the flu, right? I mean, it's just part of the culture. Strangers kiss strangers. You know, hygiene such as washing hands frequently is not taught. People sneeze into their hands. People are hugging every. It's going to be a disaster. All of Latin America. All right, so I feel like I'm an autopilot this morning. That's a good thing. It's Friday. So the title of the stream is, risk off going into the weekend. Be careful out there. Let me shut this off. Risk off weekend. Be careful and just keep that in mind. By the way, if you're here with me today, right now, definitely hit the thumbs up. Let's try to get some people in here. We had a bad day yesterday. We're on it today. And I can't imagine this turning around. And if it does turn around, any rally is going to be sold. I will be using any rallies as an opportunity to add to positions, not to get shaken out of my positions. So I'm going to leave this open to everyone today. So here's the theme. The theme has not changed, right? We broke over here the support. We're now expecting on this failed breakout to have a strong Japanese yen. Strong Japanese yen. The place to play that is not versus the dollar. That it's to play that versus basically everything else. Here's the Canadian dollar, Japanese yen getting toasted. I think these moves are going to continue. Swiss franc. Those are my two other positions: Australian dollar and the New Zealand dollar against the Swiss franc. These are bleeding out, and I'm going to continue holding them. I think everyone needs to. By the way, look at this move on the US dollar, Mexican peso. This is a carry trade falling apart. That's insane. I'm really just trying to really to get everyone. This situation is obviously, we don't have to even discuss how terrible it is, right? The good thing about it is people don't seem to be, a lot of people are recovering. That's really good news. But either way you look at it, it's disrupting the global economy. This is an opportunity a trader needs to take advantage of. This is abnormal conditions for the market. We really want to get everyone into some positions here that can make their year, if not more. All right, have that mindset. Have that mindset. Sometimes we got on these breakdowns over here. We did get the retrace into them. In this type of environment, you might not get retraces. What's going on, Martine? Good to see you. Tico, you got wrecked. So let's talk about QE. hold on, you got right. I need to catch up on your comments here. There's a good chance the longer this goes on, of 100 million percent potential for real QE. That's what I like to call it too. QE for real. QE number 4 for real is what I'm calling it. Because they're already doing QE, as Janero was the first to point out to me that it really was actually QE, which it is. And so I think, text notes, please. Buy, sells. Amir, I'm not fully understanding what you're saying, looking for. Please let me know. And so I think we were talking about, Martine, early, the tight correlation between the S&P and the euro and how that is going to be broken today. This looks like a failed break above this area of resistance, and it was sold. And I think that momentum is going to continue, because I think traders want to hold dollars over euros into the weekend. And when I say the correlation, if you pull up the S&P and the euro and you look at them over the last 30 days, they are almost 100% correlated, as foreigners first were putting money into the US equity markets on that run up, and then the Europeans started pulling it these last few days, and you saw that money coming in buying euros. But now I think those flows have ended. I think we're going to see that dollar firm up. I was selling I was building position here and selling it here, and now I'm 100% short on the euro US dollar, no longer holding any of those longs. Amir, I don't do that. So we have, let me pull it up for you. We use this live stream as an opportunity to go ahead and teach traders a lot of, I think a lot more of the mental aspect of what it takes to do analysis, and the patience required. You know, we look at anything anyone's interested. We usually go over almost every currency pair. I give my overview of the market, my view of the market. No matter what time someone's trading, I think it offers benefit. If you're interested in more in learning how to trade, Amir, if you're looking for signals and or copy trade, then go ahead and do take a look at the services that I do offer, and that will be of interest to you. But in this live stream over here, we work together as a community. I'm not providing buy and sell signals like that. So again, we are just pointing out, we are seeing the acceleration here of the dollar buying versus the euro, with the markets also down. That correlation is breaking down during New York here today. The correlation is, I want to talk about Bitcoin because I'm a Bitcoin lover. And so this is looking really good here. 85 is holding right now. If that holds today, we bounce off. That's a good place to look for an entry. This is 82, no? Yeah. And then over here, 82. Again, I really think 82 is going to hold. I strongly believe 82 is going to hold. If we get down over the weekend into that area and a resumption off, that is a phenomenal place to look for entries. I don't think we break 82, and I think anything right now is an opportunity to buy Bitcoin. I think this is some really good entry points. I do not think that Bitcoin is factored in or correlated into anything that's going on right now in the overall scheme of the things. Now, it's never been proven what would happen to Bitcoin in a downturn, in a crisis situation. It's never been proven. Nobody knows. My own personal belief is that Bitcoin will act like Bitcoin and stick to its 4-year cycle. The ones that I've tried, because I think it's the most important trade of the decade to really point out to everyone. I think that's what Bitcoin will stick to. Now, under these circumstances, I mean, silver is down more than Bitcoin today. You know, I don't think Bitcoin is Bitcoin, and that's, being that's what I believe. That's what I'm just sharing over here right now. A lot of people are saying, well, Bitcoin is supposed to be a risk off asset, and that's not happening. Well, gold is also supposed to be one, and that's not happening. And I don't think that Bitcoin is one anyway. Um, so I think Bitcoin is an uncorrelated asset, which is one of the most enormous advantages of it, aside from being, something that is appreciated versus every other asset on the face of the planet over the past 10 years, over the past year, over the past 3 years, 5 years, whatever. Nice. Blair equities are opening right now. Let's see pump it on that open. I think there's some important levels to look at over here. DJ, if you're here, let us know what you're watching. Listen, here, like, the market's so complicated, oversimplify everything. We're going into a weekend, and the odds of, bad news as far as coronavirus escalations around the world, the odds of seeing those come across the wires are extraordinarily high. We just said, in the last 15 minutes, the first case was happened in Mexico. So, I'm holding risk off into the weekend, and assuredly we'll be holding it through next week as well. We'll reevaluate. I think they're up about a percentage point in the last 5 minutes. Look at that. Boom. There you go. Coming into the first area of resistance, I would say up around here at 29.32. It's a little bit stronger. And then there was my 29.20 level. Let me just draw those in so we can watch them today. 29.20 was a big level to the downside, so it should be to the upside as well. So I really want to get everyone kind of in that mind frame of looking to be positioned risk off, to be looking on any rallies to add to positions or get positioned. We're in a different environment than we've been. We've talked about how we've been seeing that few years of that really big consolidation of volatility in the FX markets, and that leads to the opposite. That leads to huge expansion, and we've seen that huge expansion happening since late December, going on all the way till now, and now it's even growing bigger. When the markets are expanding like this, they continue to expand. I remember the pound Japanese yen, we would a 300-400 pip, a daily pip range became the norm during the last crisis. 300-400 pip range. So, got to adjust with the markets. You got to adjust with the markets. All right, I'm going to leave it to you all. You let me know what you want to look at. You all let me know what you want to go ahead and review and look at, because my game plan is well, I laid it out to you, you know. and I'm not searching for setups at all today. I'm holding. I'm just trying to keep a read on the market. Look at that bounce. It's a big bounce on the opening here, 5 minutes in, and the markets are off almost 1.4%, 1.5% to the upside since New York opened. Is that the plunge protection team? I have no idea. Again, any rallies I believe will be sold. FX is holding. FX is holding on to the risk off. Oh yeah, absolutely. Look at this bounce on oil. So OPEC is meeting very, very shortly. Saudi Arabia talked about cutting what is it? An enormous amount of enormous amount, because the demand out of China is simply down. You could see actually looking here, it came right down into the support level. That's why we use the support and resistance. I think best case for oil right now is going to be it consolidating. This is the best case, that it consolidates around the support before making another leg lower. Or if we receive, I don't know how much of a bounce we would get, but you can see over here, this is the next area to focus in on. I'm going to move this now down to here, turn this red. I mean, just keep it simple. There is no demand for the demand for oil now is becoming less and less. And as more countries go on to quarantine and lockdown, that demand for oil will also decrease even more. So there's really no reason to be looking for any type of long trade on oil, or especially going counter trend, trying to catch a bounce, sell any bounce of oil. But this is traded so textbook. And when I say textbook, I mean, here's the breakdown right here. You can see price came in, tested that broken support, it held as resistance, came down into the next support, right? It held on the second touch with a slightly higher low. And then after breaking through the local resistance, tested the big resistance, back down into the support, bounced, broke through the support, and then down to the next support. I mean, oil is just trading 100% technically. Look for it right now to consolidate down. Best case scenario, maybe into the OPEC meeting, possibly it consolidates. I thought it was going to hold this level over here, the support, earlier in the week into the OPEC meeting. It broke down and made a whole nother leg down to the next support. So right now, I expect again this support to hold. Maybe at most we and I don't think so, but at most we come back into 49. Maybe if OPEC winds up cutting production even further, but Saudi Arabia already did that last night. Oil's still down on it. Oil is definitely a barometer of the global economy, which doesn't need it as much right now. Pound, Japanese yen. Yeah. Ooh, look at this, Hanero. And okay, I can't be mad. I did want this one very much during our live stream yesterday as we were talking about it. I wanted all of the. So yeah, we're right now into this. I'm gonna look on the daily because we could be on the daily here. Look at this. This is the support of the breakout of the trend line. Broke out over here. That held for, this was 6 weeks of consolidating. 6 weeks of consolidating, putting in that big support, and then price broke up. It's now coming back and testing it. Does it look like it's going to hold? does not look like it's going to hold. Again, those that are short, I would be holding. I am holding my short New Zealand dollar, Japanese yen. I'm not giving up on it. This looks like it's going to break down to me. And I think that's a pretty big support level over here if it does bleed out. So as far as what to look below, let me extend this because that might be a guide. There's not a lot over here. There's a lot of space. There's a lot of space. 130.70, I think, is a pretty big level. Of course, you have something a little bit here at 135.76, but over here, there's a lot of empty space. If you lose this level over here until you get to 135, so I'm talking about, it's time to really look to hold trades, and on any retraces, look to add to positions. And here it is. I mean, technically, from the line I have, I don't know how accurate it is, 139.41.6. The line I had there, though, price has broken through, come up, already retested. Even on the 15-minute here, if you start making lower lows, I think you want to be holding. $131.17. Yeah, that's what I'm talking about, Hanera. That's a long way down. That's a long ways down. But $131.17. Resistance, support, somewhere in that area, right? You're picking the top of it. I see where you're at, and that's the truth. So, are we going to fall here in by next week? I have no idea, but things are not looking good over here right now. It looks like that the possibility of this being a break of support is very valid, and there's not much else to say. Risk on, risk off is, during risk on environments, people believe that the global economy is going to see some growth. You'll see commodity currencies bid up, things like the Australian dollar, the New Zealand dollar, the Canadian dollar. You'll see equity markets rising. You'll see oil rising. In a risk-off situation, you see a flight to safety. Things that are considered safety are the Japanese yen, the US dollar, and the Swiss franc. Gold, yes, gold has many other factors in play. What else? I think that's the simplest version, but I do highly recommend, as I do all the time, is to search, right? I don't even want to say Google because I can't promote, something so invasive, but I use DuckDuckGo, YouTube, Google. When I say Google, I mean look for for a better understanding, because this is obviously how we all just continue to learn. So as well as asking the questions of 100%. And then really the simplest way to explain risk on, risk off is that in a favorable environment where people are willing to take on more risk, you see risky assets bid up. And then risk off means that people are very concerned and they go for the safe things. And as far as FX concerned, the safest is the Japanese yen, followed by the US dollar, Swiss franc. Wow, the euro is really coming off now, hard and fast. Nice. So you could even just search baby pips risk on, risk off. And then for real, not only that, I do welcome any and all questions, 100%. which is why I wanted to give the overview. But I also, at the same time, I want what's best for you and for everyone, right? Which means helping you develop the tools that you need. And a big part of that is putting in that extra research. I know you do it already. I know everyone does it. And sometimes something said for one person benefits another. So, by the way, gold and silver are getting wrecked. Again, gold looks pretty good, still holding the breakout. Silver is down 4.5%. That looks pretty ugly. So, I mean, when I look at it, I honestly think silver a year from now is going to be much higher. I do remember silver trading at $7 or $8 though during the crisis. $8. And I also remember between 8 and 12, or 8 and 20, buying it up. I had no idea that it was going to go on to $50. I had no perspective, I had no insight, and I didn't understand what quantitative easing was. I had no idea. Um, I literally had no idea. Now we do. So there's the worry, though. Look what happened during the last crisis. You saw silver go from $17 down to $8, right? So it's trading right now at $17. You know, is there I'm not saying it's going down to $8 at all. I have no idea. I think this time is different as far as what happens to precious metals, but that's not how they're acting right now. You know, maybe I don't know. I have no idea what happens. Wow. Trend line held back above this resistance. Dollar looks like it's warming up back into beast mode. I think we're going to see much higher dollars. Right? I think we come up. I think 120 is in store. So I was so tempted even last night to take profits on this US dollar Canadian dollar trade, because since the breakout, right, I got in over here, and in a day and a half it just came up so hard and so fast. And then I said, you know what? These are extenuating circumstances where I normally would take profit. I'm not going to take profit. I'm gonna let these things run because I think the dollar is gonna go. I think the dollar is gonna go into beast mode. And then just to talk about it again, anyway, Bitcoin, because it's in an area that if you're interested in owning Bitcoin, going into the halving, which is about 2 months away, and going into the next bull market, this is a gift of an entry. I really believe that. I do believe 82 is going to hold. And if we hold over here at 85 after the second test over here and start resuming up, that's also good and fine. And you know what? There's no rush also, because if you really want to, you could start waiting until we break out this triangle. You don't need to buy the low. You could wait until Bitcoin breaks this trend line to the upside, whenever that is. You could wait until it clears this area above even this resistance over here, call it 11,120, right? You could wait and get in there, because that will be Bitcoin really, really, really cheap. But if you're looking to pick a low, I think we're close to it right now. Yes, Dominic, the dollar is safe. During the crisis of 2008, the yen was the only thing stronger than the US dollar. The dollar was stronger than everything else. And the dollar is absolutely a safe haven currency. Lots of volatility. I'm here with y'all. 1 second. Taking the coronavirus out of the picture, do you think the situation we're now is similar to 2008? I mean, should we get ready for some kind of crisis that would last a few years? Hold on 1 second. I'm so sorry. I have an emergency.
Hey, better connection with just the audio. Can you hear me now? Oh.
All right, sorry about that. So that's a very good question, Dominic, as far as um, what we should do, how we should prepare. You know, things were very delicate. Things were very delicate as far as the whole global economy was concerned, as far as what was been happening with China and Russia, as well as we've been on the longest bull market cycle in history, going on, what was it, 12, 13 years. So we were already setting up for a recession before any of this happened. And now that this has happened, it absolutely is concerning. And overall, it's probably a good thing for, because it's not good to continue with that without any type of business market cycle. But again, the best thing that I can say is try to get into some positions here instead of being so short time frame minded. You could make some of the trades of your life. And it's not about, I mean, you're a trader trying to obviously make money. Not looking to do that off of things falling apart. It's better with, doing it the other way when things are working out well. But you have to position yourself accordingly. And right now, that's get out of risk assets. you know, aside from, listen, long term, you need to own some gold as insurance and protection, because even though the dollar, is going to strengthen eventually in our lifetimes, it's going to end badly. And I also believe firmly that you should own some Bitcoin. I think that's the best way to prepare, right? But right now, we're seeing inflows into safe haven assets. Uh, if you're not yet positioned since yesterday into the Japanese yen, I think you want to start building those positions, and also U.S. dollar positions. And I really just want to think that people should not be so short time frame minded. That you should be looking to actually build positions. Any retraces, and there will be retraces. You're going to see either the Federal Reserve say, "Oh, we're going to lower rates," and you're going to see the market maybe rally. That rally will be sold until the Federal Reserve gets rates down to zero and starts QE, and then you hear people on the news start talking about, we're seeing green shoots, we're seeing signs of a recovery. That's the earliest beginning of perhaps seeing a turnaround. We're so far from that. We haven't even started the downturn yet. I am nervous about gold. I'm nervous about when to step in there and what is going to happen big picture. Thanks, Dominic. I appreciate that. I do. Silver is down 5%. So sorry to keep saying that. It's just so bizarre to see that. And gold obviously does look a whole lot better than silver. You could see that gold is not only maintaining the breakout, it's consolidating pretty well, whereas silver broke out over here and then has failed. But it is coming down into this area of supply. It looks like it's possibly now breaking below this area of support over here. If it doesn't bounce during this session, I think things could get much worse. I don't know if this is a time that you take advantage of the weakness, or that what played out last time is going to play out again. And during a liquidity crisis, if this becomes a liquidity crisis, and if we start seeing some commercial defaults, credit defaults, which this crisis will not be a housing crisis, but will be a credit crisis. Perhaps you're going to see these precious metal positions liquidated, and those that are smart enough to be able to buy in. Again, once the Fed starts QE, it's all about timing. And so something else that I really want to talk about and address is if anyone is holding on to losing position. For example, if someone was long the Australian dollar, US dollar, um, listen, you gotta respect, and you gotta be very, very prudent about proper risk and money management, right? And you can't let a trade ever go against you. If you're risking 1%, if you're risking a 0.5%, you got to abide by that, and you got to get out of your trades. You got to follow what's on the charts. But in this environment, trades have the potential of really going against you, of really the same way that you want to be positioned and holding on things here. For example, on the euro, Swiss franc, if you're buying this, and a lot of traders right now are buying this, you got to have your stop in, and just not get caught on the wrong side here, because if this dumps, it could take out the stops and then could keep going. So just be really careful. Be really careful. That was also the title today, right? Is risk off into the weekend, and be careful, right? Be careful out there. So you could see the markets now, even at their lows, making new lows. It's risk off into the weekend. Again, any rallies are going to be sold over the immediate term. In a couple of weeks, I think we're going to start seeing the cases rise within the United States. And, the situation is as such. But I think we're going to cut it short today. It is Friday. Everything else is on autopilot. It's not the type of day to be searching around looking for setups. Again, I think the theme is on any retraces, either add to positions or establish a position. But the moves that we're seeing in uh, FX has a dead on. You could see even when the equity markets rallied this morning, 1.5%, risk off and FX didn't budge. Here you have the US dollar Japanese taking out another support level. Watch what happens on the pound Japanese yen. The level's gone. It took it out, Hanero. I think you were on top of that. And these moves, I honestly believe will be extended. There will be bounces. Don't get shaken out of your trade. Don't try to be a trader right now. All right, try to take a position and know how to push it. Yeah, that would be fine. I don't know if that's something that we should do live, or I should prepare a video on that. You know, um, but of course, I want to discuss all things trading, 100%. I'm not mad at all that I didn't get in my Tesla short, but 100% I did say when price was over here, if price came up and didn't make another high, that would be the time to short it. Now I didn't short it because the only place that I had to short it was on simple FX. I was gonna look at shorting Bitcoin, shorting Tesla in a Bitcoin account. And the reason I didn't do it was because I heard about some people that had problems with simple FX. Now, those problems were all the way in 2017, 2018, maybe in January. And I don't know if those people, if there was good reason for it or not, but there was enough cause of concern that I didn't want to do it. And again, I always like looking at things as learning exercises anyway. And we were looking at the pattern on Bitcoin at the top of the peak of the bull market in Bitcoin, where price did exactly this. And we're talking about that being the ideal place to short Tesla. And although it would have been great, I'm glad just to be able to see it. All right, everyone, have an awesome weekend. For sure, it's going to be an interesting time ahead. So I'm glad to be in here with you guys, and it's a really great place to be. So I'll talk to you all later. Thanks for everything. See ya.